Welcome to Trading Nation. I'm Mike Santoli. The Dow and S&P touching multi-month lows on Tuesday, weighed down by a mix of disappointing earnings reports and geopolitical tensions. The major averages now well off their respective all-time highs hit last month. So will stocks retest the February lows or climb higher from here? Stacey Gilbert is with Susquehanna, Craig Johnson with Piper Jaffray. Craig, give us your sense of the setup here in this whole kind of pullback process. A lot of folks looking at the morning action today were wondering if this might have been a potential successful retest of those October 11th lows. But where do you think the bigger picture, what does it look like from here?
Yeah, Mike, so I brought a couple of pieces in. First, I would just say in terms of the overall election sentiment, we've been way off the normal seasonal trends. We've been way above those trends typically you've seen since 1928. So I'm not surprised to see some correction coming into the election time frame here. But when I look at the chart of the S&P 500 on a near-term basis, we're about 7% off the highs. We had this kind of fake out, breakout type scenario. It's ended up becoming a fake out, similar to what we had seen in 2000 and 2007. And now we're coming back down to retest support at 2,700. What's interesting to me, Mike, is that the internals of the market are very weak. I've now got only about 28% of all the stocks that we follow remaining above a 40-week moving average. And I've got single digits in terms of our groups that are in any form of an uptrend right now. So the setup for me is we're going to go retest this 2,700 level for the next couple sessions. I'm not sure it's going to hold because usually when we get to this kind of weak internal readings, we end up seeing some sort of flush out. I think that flush out is still ahead. I think it's going to be another 5 to 10% lower from here, and it's probably going to take about 14 to 16 weeks to work itself out. And if you look at the longer-term chart, Mike, that I brought, you can see that that long-term uptrend support line comes in around 2,500 on the S&P, which lines up with the right shoulder low we made in 08 and 09, touched in 11, touched again in 16. That's where I think you'll find an investable bottom to get made, and it probably is going to be a little bit longer before we get there.
Stacey, talking about the years 2000, 2007, those are some relatively scary touchstones. Those are bull market tops. Is that the way you would see it here? Or do you think that we can actually have some kind of recovery attempt in the fourth quarter?
Yeah, I think the market is actually setting up for a recovery. I think Craig brings up some really interesting points about the potential down move. Here's what I would say from an options perspective. What's the probability that we touch 2580 by year end? If we look at the S&P 500 options, it's implying roughly a 15% probability that we're below that by year end. If you just kind of give me a little bit of freedom here and say, okay, let's look at it from a quantitative standpoint, that gives us roughly 30% probability that we touch it between now and year end. Let's flip it to the upside. What's the probability we retouch those all-time highs that we saw earlier this year? You're looking at a 10% probability we're above there by year end, and call it a 20% probability that we touch it. So these extreme moves aren't obviously what's most expected in the marketplace. One of the points that Craig brought up that I think is really important with what we are seeing in the marketplace is it's not set up for a major pullback. Majority of the flow that we see is investors selling out of their protection, buying some upside. So if we were to see any, whether it be tariff announcement, any just unknown news that actually did create a notable pullback, I think it would be a surprise to the market. And my biggest concern for the market right now is not what's known, it's the potential gap risk that's out there. And I think the market may be underpricing that. So if we do go down, I am worried that the down drop is significantly larger than obviously we would see on an upturn.
All right, and that 2580 level you mentioned that has some kind of less than 50% probability of being touched. That's more than 5% down from these levels. So just for some context there, Stacey and Craig, thank you very much for joining us today, and thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.